What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button. If you haven't already, hit that subscribe and notification button as well. That way you're alerted to when we release new videos. Thanks to all those who continue to tune in. It really helps the channel grow. Thanks to all those who are new to the channel. We hope you find a nice home here and look to see you in the future. Getting back to the videos, the nightly and weekend videos, like tonight's video, we mostly focus on identifying triggers and targets for trades ranging from scalps and intraday trades all the way up to long-term swings. So make sure you pay attention. We go through all the time frames, but if you want a deeper dive into exactly how we set up our charts with the broadening formations, the levels that you see out there, make sure you check out the bonus content on our YouTube page. We've got a couple of videos that dive deeper into that for you. And if you're not familiar with the STRAT, make sure you check out the link in the description of this video. There's a link to a free quick reference PDF guide here. It's got everything you need to learn the STRAT, right? It's a very simple way to learn how price action is moving in actually quite a bit of detail. So make sure to check that out if you're not familiar with it. And yeah, let's go ahead and check out the agenda for today's video. We'll go ahead and recap the price action from today, Wednesday, April 8th. Before we zoom out, like we always do, take a look at the week, month, quarter, and year price action. Then we'll zoom back in, set the what we call our 4-hour markers and the triggers and targets for Thursday, April 9th. We'll also do a quick review of the triggers and targets for the week, the month, the quarter, and the year as well. So pay attention. We'll be, like I said, giving some pretty good information on all time frames here, right? So let's just go ahead and get into the charts like we always do. Let's start with the 5-minute. Like we always do, this is how we take advantage of our proven and repeatable strategy for early scalps, if not right when the market opens, a few minutes into the market opening, or, if you don't want to do an early scalp, there's also ways that this can be used as just early entries into longer day trades, right? So the strategy is this. It's simple. We plot the previous high day, overnight high, previous low day, and overnight low on the chart prior to the market opening. And once the market opens, we mark the opening print or the first traded price of the day, and we use those as our guardrails, excuse me, and guides for the trades, right? So if we get higher lows at or above opening print, then we want to look to get into calls targeting overnight high and previous high a day. If we get lower highs at or below opening print, then we want to look to get into puts targeting overnight low and previous low a day. Today, huge gap up, right? Huge. Obviously with, the ceasefire talks and things of that nature, it really drove the market higher overnight. And, we opened up with a huge gap up. What that does present us with, as we've talked about in the past, is pretty good risk to reward to fade the gap should the right triggers be there, right? So here we have opening print is this price level 166.27. So we opened here, we pushed up and immediately hit overnight high, right? Not only did we hit overnight high, this orange dash line going slightly down to the right, that is a daily downtrend line. And then we've got a couple of fibs here, including this 138.2 fib extension of all of 2025's price action. So pretty good levels of resistance above, at least intraday. And you can see that reflected here. We wicked up through there, came back down, made this higher low. And so there was the opportunity to enter into calls here, and we actually did that in case the market wanted to just continue to take off. But remember where the risk to reward is, especially with the proven and repeatable strategy. This would be used only as a early entry into a longer day trade, or at least a longer scalp than just 5 minutes, because that's all it turned out to be, right? We got the come on now. There we go. We got the, come on, thinkers. There we go. We got the higher low, and we went ahead and entered here, but knowing that we're above previous high a day, so that target is out of the picture, and overnight high is right here, that target's basically out of the picture too. So again, that's just trying to get our foot in the door on an early entry on a longer trade. Weren't really heavy on this because, again, it's kind of a blind entry. I don't want to say blind entry, but the positioning isn't great, right? So Knowing that, we had a smaller entry, and you can see here we ended up putting in a lower high. We went ahead and exited that position and actually entered into some puts. Again, not a heavy position because we have to recognize the momentum that we have going up, but just all based off a location. Again, levels of resistance that we talked about here, but not only that, we've got opening print and we've got a lower high at opening print. It's not quite below opening print, but it's right at opening print. So there is a slightly more risk if you enter on this one. So we went ahead and entered here, pushed down, got the lower low, came back up, got the lower high. And with that lower high, we went ahead and added a little bit more to that entry because it's, again, that was more, not totally beneath the opening print, but you can see it was basically underneath the opening print as in comparison to the previous one, which itself was basically right at opening print. And you can see the floodgates, quote unquote, opened for a brief amount of time, right? We got a quick little flush back down into the broadening formation, basically, right? This is a 4-hour broadening formation. Here's a 1-day broadening formation. We also got the 161.8 fib extension of the end of 2025's range. So, coming down from above, that's going to be a level of support. And we've also got the 200 fib. Let me activate it so you can see the 200 fib extension of that April 7th bull flag, right? We talk about that a lot, basically every day. So, those were going to be levels of support. And you can see we got the low. We didn't exit on this candle, right? We waited till we got the higher low, which we were willing to risk, closing out at break even, right? In case the trade didn't work out, because we knew that risk that was associated with this, with the momentum that the day opened with. We're making higher highs after higher lows on the 1 hour and the 4 hour and the 1 day chart. So everything is really more leaning towards the bull side of the equation, but there's no problem in if you're confident in what you're doing and you're willing to hold yourself accountable and not, and keep your stops at where the stops need to be and not let them continue to fade up or something like that, then, go ahead and enter those. So we got this soft higher low here, and we decided once we got that, if we went, first it was a 2 down, appearing to be a higher low or what could be a higher low if we didn't come back down below this. So we already knew that if this ended up being a higher low, 2 down, and then we went, go 2 up the next candle, we would go ahead and exit, at that, high right here. And actually it gave us the higher low, higher high in all one candle. So we went ahead and exited the put position here, and we exited the full position. There was no real reason to hang on into any runners at that point. If we pushed back up, there was another reason why is because there's a decent amount of range that we could have, or a decent amount of price that could have gone up. Oh God, what's going on with the charts before making the lower high, right? So technically this would be the more solid lower high, and then this higher low, right? Because it's not part of this 3 candle. We don't usually like using those. And if this was a call going to the upside and we were going with momentum, then we wouldn't have, just used the soft higher low, or higher high in that case. We would have, waited for a more solid one. But because we're going counter trend here, against momentum, we want to make sure that we're getting all that we can. And so that's what we got onto the downside. We entered up here around 66.20 something, and we exited around 65.37. So a little less than $1 worth of movement that we were able to capture, but still decent price action, right? And what that did is allow us to give us some time to reassess the situation and see how we're going to go back to the upside. And when you look at things like the internals, let's go over here. Here's the QQQ internals. When you're looking at these, you would be more inclined to think that we will push back to the upside, right? So tick, obviously the quickest moving of them all, and that's gonna, that's your early morning, people taking profit and things of that nature, right? We didn't just slam to the 0 line. We came down, slammed to negative territory into trend lower zone, right? We came down, we hit the 0 line, bounced back up to trend higher zone, 0 line, trend higher zone, 0 line, really played around 0 line, dipped below it a little bit, and just slightly to trend lower zone before snapping right back up. You can see we were at 0 line or above most of the day until, again, a little bit more of a dip at the end of the day. People taking their profits, starting to peel off. I did misspeak yesterday. I thought CPI was going to be today, but actually that's not till Friday, and CPE is tomorrow. So Maybe you've got some people de-risking before economic numbers come out tomorrow, things like that. But for the main part of the day, the tick was at zero line or above. Vol QD was in trend higher zone basically all day. It was almost at it when the market opened, and shortly after the market opened, it was in trend higher zone and stayed above there. ADQD, while breadth did go down a bit, it was still within trend higher zone, actually like above the normal upper range of trend higher zone, right? Trend higher zone usually starts at 1500, 2000 being the usually the upper range that we get to, but this was up and beyond that all day, right? So internals, no reason to hold. Another reason why there's no reason to hold those puts that we had there. What we did wait for was the higher low. Again, we were looking to see, kind of wanted to see the higher high in comparison to this high here, and then the higher low above opening print, but instead we got this more solid higher low here. With a little bit of added risk, we went ahead and entered the position of calls, pushed up, got the higher high, higher low, this time at or just slightly above opening print. We went ahead and added to the position there a little bit, pushed up, came up here, ended up getting this big 3 candle, which could a little bit of a scare in us, but it not a scare, but it put us on warning, right? Thought we might get the lower low in comparison to these two here, although it would be coming from a higher high, so it would be just more creating a broadening formation up at this level, but ended up getting a soft higher low here. But then these one candles or inside candles, 3 successive ones, it kind of starts to say, we're kind of running out of steam here. So we did go ahead, and once we went with this soft lower high to lower low, we went ahead and exited the position, a majority of the position. We did leave one runner through the end of the day, which ended up turning back up to the upside. And again, we had some swings, a couple of runners that we swung overnight last night. Those hit really big, so didn't see too much problem with swinging a couple of runners there, and actually wanted to swing a couple, but ended up only swinging one. So we'll see what ends up happening tomorrow. Again, CPE tomorrow, and I believe continuing jobless claims are tomorrow, then CPI on Friday. So keep an eye out for those economic numbers, that economic data to possibly affect the market. How much, we'll see, right? People seem to be pretty high off the fact that we've got the ceasefire, and things may start to go back to normal, thinking about lower gas prices, all that type of stuff. So, we'll see. Even if, the economic numbers aren't that great, will it affect the market that much? Who really knows? But that's what we've got from a zoomed in perspective. Again, 15-minute, pretty self-explanatory, right? We got the lower high here, came down, made the lower low, but then pushed back up. This is what we were kind of looking for on the 5-minute, but it ended up happening on the 15-minute. Let me make this bigger, because I'm sure there's plenty of you like, what are you talking about? There we go. So we got the lower high, lower low for that push down. Then we pushed back up, made this higher high in comparison to this high, and then made the higher low right at opening print, and then kind of blasted off from there, right? So here's where we added to that position that we started on the 5-minute, which was right around here. But yeah, pushed back up, made a higher high, higher low. We'll see if we get a higher high, but so far, in the grand scheme of things, this is just a higher low. Well, on the 15 it's not, but if we go to this 1 hour, right? There we go. Here's today's price action, right? We got the higher high, higher low on the 1 hour, higher high, higher low. Well, we haven't gotten 2 up yet, so this is looking like it's going to be a higher low, but even if not, we can come all the way back down here to the 63.50 area before we're making any type of lower low. And again, we're coming from a higher high, so even if we make a lower low, it's just a broadening formation. We're not starting any type of downtrend, right? 4 hour, same type of thing, just shot off, 2 up on the day. I'm sorry, on the 4 hour, so not a lot. It's not like we had a 2 up, 2 down to even start making a higher low on the 4 hour. We're just continuing to push up. So tons of room to make a higher low on the 4 hour. We would have to come back down to this $52 area before making a lower low. Again, we are hitting this daily broadening formation, which again, we don't put a lot of weight into just, I'm sorry, this is not a broadening formation. This is a downtrend. We don't put a lot of emphasis into downtrends unless they're, we're running into them where they're intersecting more major horizontal levels. And this 138.2 fib extension is of, that's the fib extension of the full price action for 2025. So it's going to be a significant level. And you can see how it nestles in here with, let's activate this so you can see it with that 200 fib of the bull flag fib extensions from the April 7th low of 2025. So decent level of resistance. You can see if we look to the left here, it did seem to be the top of the range early on in 2026, right? These would be considered to look above and fail back in, look above, fail back in, look above, fail back in. So that 138.2 fib extension is, I would say the start of the resistance zone. This 78.6 fib extension of the end of 2025 range, I would say would be the more this range right here, this small cushion, that would be the resistance area, I would say. Anything above, we're starting to look above and possibly fail, or we're getting into the next range of trading that we'll be in. So we're at, we started out the day, or we ended the day yesterday at the top of the mini range within the larger range that we've been in for 2026. Popped out of that, and we're back towards the top of the larger range that we've been in. So now we just got to see, are we going to continue momentum and pop up higher and into the next range that we'll be trading in, or are we going to stay within this larger range that we've been in since the beginning of 26? That's going to be the question, right? So go to the day chart real quick, and again, we had that. Come on, think or something. There we go. We had this higher, solid higher low here, higher high, soft higher low here, obviously a definite higher high here. So got an uptrend on the day, but we're within this weekly broadening formation, right? You see these purple lines right here and right here. Those are your weekly broadening formation levels. So even if we are in the uptrend on the day, we're not in one on the week. So we're just still moving sideways in the bigger picture, higher time frames, but big explosion at least from the day and down, right? Speaking of the week, let's just take a look at it real quick, right? We on Monday triggered the 3 2 down 2 up. There we go, which had a magnitude up here at the high of the 3 at the $58 level. We've obviously completed that strat and gone past it, right? So could you look at this as a compound 2 down and then a 2 up, which would take us back up to the year's highs, back up here at 72.36? You could. It'd be a very, kind of a loose interpretation of it, but as far as, more immediate strat reversals, this 3 2 down 2 up triggered and has run to completion. So, we just got to see where this is going to end up. Again, this 3 candle a couple of weeks ago was a soft lower high in our opinion. Again, it's a 3 candle and not a 2. So it wasn't a solid 2 up, giving us a concrete lower high. So, again, is this going to be considered a higher high on the week time frame? In our opinion, no. But again, it's up to you and how you would see things. But even if it is a higher high, we're coming from a lower low. So again, it's still just a broadening formation on the week. Okay. On the month, we went ahead and triggered the 2 down, 2 up. Let's get a cleaner chart here. There we go. All right. So today's move did trigger the 2 up on the month, locking in last month as a higher low. So we are continuing this higher low, higher high, higher low on the day chart. So the uptrend is still intact. Will it extend? Meaning will we make a higher high? That still remains to be seen. But for all intents and purposes, that possible 1 combo 2 up, combo 2 down to bring us back down here to 28 looks to be out of the picture. Now, if we pull a 3 on the month and go bearish engulfing, right, it's back in the picture. But until we, if the month finishes and we go 2 down in May, then obviously we've got a 2 up 2 down situation which would take us back down here to the lows of March, and then could you say that's reigniting this one combo 2 up, 2 down to get us back at 28. Maybe that's more messy than even the week chart that we were just looking at. So for right now, I would say that one combo 2 up, 2 down to bring us back down here to 28 is, kind of defeated from the month perspective. Right now, from the quarter perspective, it's still on the board because we're still an inside month on the quarter, and we still have the possibility of going 2 down. Right, we've just started we've just started the second quarter, so we really have like a full 3 months left. Right, this could just be the beginning. Right, just like first quarter, we had that big push up and then the push down to give us a huge wick. That's how this quarter could end up. And if we go 2 down on the quarter, that gives us a 2 up, 2 down, with the magnitude being the low of the candle to the left of the 2 up, which is that $28 level. So still want to keep that $28 level in the back of our mind. If things start to go, sideways and down, then, that could be brought back into the picture. But as of right now, again, like we said, put in a higher low on the month. We're still inside on the quarter, but we're in the upper third of the previous year's price action. And on the year, we've got the 2 down, 2 up that's back in force, right? Meaning current price is back above the high of 2025. So 2 down, 2 up. It did run its STRAT already up to the 70.08 level. So if we get back up there, it's not that big of a deal. We've already been there. But if we do get back up there, then we start looking, okay, are we looking for those all-time highs up here at 74.21? And if so, we reach that, then we got blue sky territory above, which we'll talk about more if we get there. But it's looking more and more like we might get there sooner rather than later. So we'll just continue to go through things as we normally do, very methodically. That's how we have consistency in our trading and avoid large losses. And it's what works for us. We'll continue to use it. That's what we got from our zoomed out view after looking at our zoomed in view. So hope everybody that was helpful to everyone. Let's go ahead and switch back to our 5-minute and bring up tomorrow's chart so that we can plan our attack for tomorrow. Right? What do we need on here? There we go. So for tomorrow, just make sure we've got all our 4-hour markers here, right? So we've got previous high a day, we've got overnight high, overnight low as of right now. And actually, it might be a little low. No, it's about the same. Overnight low and previous low a day. Excuse me. You can see our gap is marked by this kind of teal box here. It's because we got it spread out that it looks all weird. But if we were to scrunch things back up, it would just be a teal box out. It's quick gone. It's whatever. But anyways, those are our 4-hour markers. Since we do have a little bit of a pullback here in after hours, just for illustration purposes, let's go ahead and activate our overnight low. And let's say we come back down. We'll say around this area, right? Let's say that's the overnight low. So we got previous high day, overnight high, overnight low, and previous low a day. Let's say, although we do, make the low down here overnight, let's just say that price on Thursday actually opens somewhere in between. And actually, let's remove that and activate that. And let's say we close more, or we open more towards those levels of resistance that we were hitting today, right? So if we open here and we push up, maybe hit overnight high like we did today and pull back some, but make a higher low at or above opening print, then we want to look to get into calls. Now your targets are overnight high and previous high a day, so there's not a lot of magnitude there, right? So it may behoove you to get rid of half your position when we reach previous high a day, especially if there's not a whole lot of momentum behind it. If there's not, QQQ internals aren't, pushing to the upside. If we don't have that momentum, then may be a good idea to exit a good half to 3/4 of the position, and then leave some runners for our 1 hour, 4 hour, and 1 day triggers and targets to the upside that we'll get to here in a second. But for the proven and repeatable strategy, the targets are overnight high and previous high day. So not a lot of magnitude there. If we go to the downside, however, if we open and we push down and we pull back up maybe and get some type of lower high at or below that opening print level, we want to look to get into puts. We want to target overnight low and previous low a day. Now you got to keep in mind, don't get too far ahead of your skis. We are in an uptrend on the 1 hour, the 4 hour, the day. All the momentum is to the bulls. We've got levels of support right here, including this 200 fib extension of the April 7 bull flag. So, we do have some support here that would need to be broken through, and we would have to be going against momentum in order to get that previous low day. So, if we do get that break, just like today, be kind of quick about cutting those, right? Take your profit. Don't let a contract go from green to red. It's better off taking whatever small profit you might get in a counter trend move, and then just get with the picture and go with the trend, right? That's where you're going to make more money. So that's what we've got from the proven and repeatable strategy, early morning scalp to early entry into those longer day trades. Speaking of the 1 hour, let's go ahead and let's bring this up. Again, on the 1 hour, we got the higher high, higher low, higher high. Looks like what could be a higher low. So we've obviously got the uptrend. We do have a 2-1. So there is a possible 2-1, 2 up that can happen. Not really any magnitude there. So it would really turn into a 2 down combo, 2 up, to bring us back up to previous high day. Again, this is the 1 hour. Now, if we go to the downside, that gives us a 2-1, 2 down. So you'd enter at the low of the 1, exit at the low of the 2. But if you do get to the low of the 2 and you've got multiple contracts, you may want to leave some runners because you breach below that 2 and we trigger this combo 2 up, combo 2 down, which should bring you back down to the previous low a day of 63.56. Keeping in mind those levels of support we talked about previously, but that would be what the strat completion would be, right? And then you're looking at getting back into the gap from yesterday. So just keep that in mind. People could be taking profits. Again, we got CPE, jobless claims, things of that nature. So there's no reason to think we couldn't pull back some. We're way above market makers expected high as well. Thought I changed this yesterday, but apparently not. This is high, not low. But yeah, we're way above the market makers expected move high here at 60.42. So pull back into reality, back to where the high interest and volume were on the options chains. Wouldn't be surprising to see us come back here, right? Not saying we're going to close the full gap, but we've talked plenty of times, especially through 2025, about half gap fills. A lot of times the halfway mark of the gap fill is a bounce point, at least intraday. So just watch for that if we do get some of that downside action. On the 4 hour, there we go. Again, we had a 2 up, 2 up on Wednesday. So if we go 2 down, it gives us a very clear entry and exit for the 2 up, 2 down. Enter at the low of the latest 2 up. Exit at the low of the candle to the left of the 2 up. So again, previous low a day, that would bring us back down to previous low a day, and then we're starting to look at the gap again. But again, we've got last month's high, market makers expected move high, levels we talked about previously as possible levels of support. So don't get too far ahead of your skis when we're talking about to the downside. To the upside, kind of the same thing, just because of where we're positioned, right? We're right at this daily downtrend line. We're poking above this daily broadening formation. Same with this even more recent 4 hour broadening formation as well. So even if we do push to the upside, don't expect another 20% up day from SOXL. That'd be a lot to ask. Maybe you see 10%, which is still a huge day. But don't be looking for another day like today, especially because the majority of the move that we got was from overnight. So yeah, it'll just be a 2 up, 2 up, and we'll have our triggers and we'll have our targets out there for you here in a second when we look at our triggers and targets. And lastly, on the day, well, not lastly, this will be the last chart we look at, but on the day, again, we're in this uptrend. Wouldn't be unreasonable to see a little bit of a pullback to set some type of higher low. But if we got good economic numbers, jobless claims are good, things like that, we could continue to push back up to the top of this range that we've been in since the beginning of 2026, back up here at this $72, $73 level. But we'll see what happens. All right. Like I said, we've been looking at the charts quite a bit. Let's just get into the hard numbers right here. The notes that we keep every day. All right, so for Thursday, April 9th, 2026, there'll be 185 trading days left. And we know the close price on Wednesday, April 8th was 67.50. We know the week, month, quarter, and year are all green. In order for them to go red, those are the levels that they would need to hit. And we know that the market makers expected to move from the close price on Friday was plus or minus $7.67. We've obviously blown through that with the announcements of the ceasefire and whatnot. So we're back out of that range. Like we talked about before, that's usually right about 70% of the time. So this is just part of that 30% that we're out of that range. No big deal. We know that we don't have any gaps above, but we did create a new gap today. Well, if you're watching this Wednesday, it was today. If you're watching this Thursday, it was yesterday, right? So a new gap there. And then, like we talked about before, the gaps at 28 and below are there as well. We talked about from a scalping perspective, early morning scalps or early entries into the day trades. We want to look for higher lows at or above opening print to get into calls, targeting overnight high and previous high a day. Otherwise, we want to look for lower highs at or below opening print to get into puts, targeting overnight low and previous low a day. Talked about on the 1 hour, we've got a possibility of the 2-1-2 down. 66.56 is the trigger. 65.77 is the magnitude for that move. If we get to that 65.77, that kicks off the 2-up combo 2 down, which should take you back down to 63.56. If we go to the upside, we got that 2-1-2 up that triggers at 67.59, but only 1 cent of magnitude on that move. But if we do, make that move, it then will trigger this 2 down combo 2 up, which has a magnitude up there at 67.98, which again is not the biggest magnitude, so we put an extended target out there for you as well. But again, this is just the 1 hour. It should domino into the 4 hour and into the day. Speaking of the 4 hour, if we go 2 down in that first 4 hour of the day, we got a 2 up 2 down triggering at 65.77 with the magnitude of 63.56. And if the rug really gets pulled, we've got some extended targets out here for you as well. If we go to the upside, that gives us a 2 up continuation triggering at 67.98, targeting 69.44 and 71.11. And on the day, if we go to the downside, that does give us the 3 2 up 2 down, triggering at 63.56. The magnitude's all the way down there at 52.13. So considering the uptrends we're in on the 1 hour, the 4 hour, the day, the momentum that we've got, things of that nature, I don't know if we would reach that magnitude even if it triggered. So we've got some intermediate targets for you here on the way down, where a price can either go sideways or bounce, right? If we get some type of higher low. If we go just continue to the upside, right, 2 up continuation, triggers at 67.98, and we've got our extended targets listed out here for you as well. Now on the week, we triggered the 3 2 down 2 up at 54.09. Magnitude was 58.25, so we obviously ran through that, as well as 2 of our extended targets, and that forced us to go, because we jumped so high, we would have had something after the 60.85, but here we are today, and we've already shot up past 67. So here are the extended targets out there for you for the week. All right. On the month, oops, we forgot to do this, bold and underline, to show that we have triggered and we are above. So we're in force on this 2 down, 2 up. 62.82 was the trigger, magnitude being 72.36. So we haven't quite reached that, but we have hit a couple of the targets on the way. Should we hit that magnitude 72.36, we've got obviously 74.21 as the all-time high that we're shooting for, and past that we're in blue sky territory. On the quarter, again, we're still inside on the quarter, so there is still the possibility that we go 2 up 2 down or 2 up 2 up, right? We're closer obviously to going 2 up 2 up, but if we were to trigger that 2 down like we talked about at 39.52, the magnitude of that brings us back down there to 28.12, so watch out for that. But for right now, it looks like we're going to trigger that 2 up, or there's a better chance, I would say, of us triggering that 2 up at 72.36. If we do, again, all-time high 74.21 as your extended target, as well as the blue sky territory targets here as well. We are also back in force on the year STRAT. So let's bold that. We have triggered and we are in force. We've actually ran to magnitude, but while we are above that 50.76, getting back to that 70.08 is the objective. And once we're above that, then we're looking at all-time high and blue sky territories, right? So that's what we've got for today's video. Everything from a scalping perspective all the way up to the 1-year chart. Again, we try to just jam in as much information as possible without taking up too much of your time. So sorry for any rambling or going further than we might need to. But also, if you notice anything that we didn't go deep enough into, you've got questions, things like that, let us know in the comments. We'll be more than happy to answer. If you look back through our videos, we've always responded to our comments. So, give us a shout if you need anything. But yeah, we'll go ahead and wrap the video up here. Wanted to say thanks for everybody for watching, right? If you did enjoy the video, thumbs up goes a long way, right? We're just trying to grow the community. It's a free channel. We're just trying to give out as much free information as possible to try and help those retail traders out there, try and get some of that money that those market makers are out there making. And like we always say, you don't need to adopt our whole strategy or even all of the strategy. If you just listen to us talk, that's great as well. But if you can take part of our strategy or even all of our strategy and add it to your strategy to make trading a little bit easier for yourself, that's all we're shooting for. So not only does a thumbs up go a long way, but if you want to give the channel or the video a share, that goes a long way as well, right? Sharing the link and letting somebody else find us for the first time, we might add to our community. So go ahead and give it a share if you so desire. And yeah, we'll wrap it up like we normally do. If you're watching this Wednesday night, we hope you get some good rest tonight. Wake up refreshed tomorrow morning. If you're watching this Thursday morning or Thursday during the day, we hope you got some good rest last night. Woke up refreshed this morning, and we look forward to getting out there and trading with you.